Hi, I'm Nakamwo B of RCN CPAs. I'm the founder of RCN CPAs and Business Advisors. And yes, it's tax time, very busy. But I wanted to stop, took some time off reviewing returns and speaking with our clients on 5 tips that you should consider if you've chosen to do your tax return yourself. So DIY tax preparation. You may just have started out in business, or you're an accountant owning and have a business, you have some accounting skills, or you just figure out that you could use one of the tax software to get that done. So 5 things you should consider if you've chosen to do this yourself this year. The first is use tax software. Not about doing it manually this time. There are too many tax forms and you could get some things missing. So get tax software that has really great support that you could call or send a text or chat message, live chat to answer any questions that you have. This is really very important because you don't want to be stuck when you're preparing the return and it's like, oh, what do I do with this? How do I get my way around that? So get tax software that is user-friendly. The second is use a checklist organizer. There's so many aspects of a tax return. Being able to compile all your income, you may have received 1099 statements, you may have received retirement distribution, many items, or even your adjustments to your income. So like your itemized deductions, your mortgage interest, your charitable deductions, a lot of things to figure out. So if you have a checklist, you're able to confirm, yes, I have this. An example, a client of ours which practically finished the return and remembered, oh, I do have additional dependent care expenses, which I did not figure that in. But because he had an organizer, he was able to review that again and realize he was missing this because there are just so many items to take a mental note of. And you want to make sure that you're maximizing your tax deductions. The third item is that you need to keep up to date with recent tax laws, particularly if you're a business owner. The rules keep changing. Even as a CPA with over 25 years experience, I have to make sure that I constantly update on the changes in tax laws. So if you're doing that yourself, you also need to do that. For example, knowing the bonus depreciation. Can you take it this year? Is it expired? There is a statute on charitable donations. What the application of deducting charitable donations has changed from last year to this year. You need to know other items, and just being on top of that. Very, very important, because you do not want to put in some deductions that are expired and then you get a tax notice from the IRS saying you should not have taken this deduction that applied to last year. A fourth item is that you need to review your tax return when you're completed. And what I mean by that is looking at a comparison from last year to this year. In a checklist or an organizer, you do have a checklist to confirm if some things have changed over last year. If there are not so many things, then it should be roughly about the same. And so if you're looking at the numbers for last year and this year, and you see that there are major differences, then you should be able to go back and say, why is there a difference? Why is there an increase? And why is there not an increase, for example? And be able to explain the reason. So do a check of that, total income, compare that, all your expenses, your itemized deductions, if you're taking that, then also your the tax amount paid, the estimated tax payments. You want to make sure that you've captured all of that. The same thing with the business. You're able to do a comparison and ensure that you've not missed out any of the deductions, and also you have included all your income. This is especially important for self-independent contractors who receive multiple 1099s. You want to ensure that all that has been captured, because that 1099, a copy is reported to the IRS and they're able to check that. So you want to make sure that all your items on all the 1099s that you received and all the tax documents received has been entered into the software. And then the last, if you're still kind of behind and you're not able to complete it before April 15th, which is the deadline to submit your return, it's important that you file an extension before the 15th of April. And if you have a tax liability, the fact that you've extended your return does not mean that you've extended the time to pay for the tax. Many people get this wrong, thinking that if you extend your return, it's also extending the time to pay. You have to make sure that you pay what is due by the 15th of April. And there are limits. The IRS calls it the safe harbor rule, where you either have to pay 100% based on your income level, 100% of your last year's tax liability, or 110%. And if you do that, then no penalties will accrue. If you do not pay, then interest begins to accrue from April up until October when you pay. If you do not file an extension, then there is a penalty, pretty steep penalty, for failure to file. So there are two penalties: the failure to file, which is very high, and then there's also the failure to pay penalty plus interest. So these are 5 tips you should consider if you're doing your return yourself. The first is use tax software that has great user support, such that when you run into any difficulties, somebody can help you, or that. The second is use an organizer or a checklist, very important, to capture all the items you need for preparing your return. If you're a business owner, print out your financial statement if you're using QuickBooks, print that out, ensure that all ties up, your income statement, your balance sheet, and everything just looks good. Then you're able to prepare the return using the tax software. And then if you're just a self-employed owner, use a checklist to ensure that all your income and expenses have been captured. The third is keep up to date with any recent tax law changes. You probably will be able to find the most recent tax law that applies this year and the ones that have expired, so that you ensure that you do not use or apply some of these past that are not accounted for or have expired this year. And there are also some new tax laws that you want to take advantage of this year. So it's important that you also add in. And then the fourth is do a review. Apart from reviewing the complete return, checking that everything that is supposed to be entered has been entered into your tax software, and then compare the year before, even the last 2-3 years, and see where there are differences. If there are differences, then you're able to explain why there's an increase or decrease in all the line items in that. That will give you some level of comfort. And then the last tip is file an extension early. It's important you file an extension to prevent any penalties, and then make sure that you also pay your tax due by the 15th of April to avoid any penalties and interest. So I've just gone over 5 tips you should consider if you're preparing your tax returns yourself. If you have any questions, send us an email at accounting@rcncpas.com, or post in the comments below what questions do you have regarding this tax season. And my team and I will be able to answer some questions you may have. If you like this video, please feel free to share that with somebody who you believe will benefit from that. All right, well, have a great tax season and enjoy that.